All right. Okay, welcome everybody to Sunday Night Live, the next super stock live stream, the webinar. And tonight we are talking about how to turn $10,000 into $10 million. It's not as crazy as it sounds. We're going to talk about, okay, the sound is working. Thank you. We're going to talk about NIO. That's the clickbait title of the video. You know, this is a little spoiler alert. NIO is just a tiny part of the live stream. We're really going to be talking about how to make real money, not these 20x piker returns. We're talking about making some serious cash potentially. Again, every stock we're talking about here, they are very high risk stocks. You could lose all or part of your money. Do not buy these stocks unless you can afford to lose your money. So let's talk about NIO. Excuse me, NIO. Right now, one of the hottest stocks on the market. Stock is about 46 bucks. Every guru is talking about NIO. I've seen this on YouTube now. It's on social media everywhere. Because again, that's they're in the electric car space. They got that Tesla thing going on. But here's what's interesting. NIO has a lot in common with our next super stocks, the companies that you see on our live streams. Almost a year ago, just about 11 months ago, NIO actually came this close to being one of our next super stock presenters. And what happened was this: the office, the headquarters, the HQ in China, they came across our site, and we had a conference coming up September 25th. I have a little email clip. For privacy, I kind of censored a little bit, but they contacted us, to present at a conference coming up September 25th of last year. The stock was about $2, and it was kind of heading down. And hey. As soon as I didn't know about NIO before. I'd never heard of it last year. When I took a quick look at it, it really met all the criteria of being a next super stock. And we're going to talk about what those criteria are. I was pumped up. I wanted these guys on board. The problem is their office in San Jose, their IR person there, she kind of threw a monkey wrench into it because they didn't want to spend a couple of grand to be in that presentation. I guess they thought they were too good for it, although they were basically a busted IPO. I mean, nobody wanted to have anything to do with it. People thought it was a scam. I mean, why else would a New York Stock Exchange company be $1.65 from where it was? But why am I telling you about NIO? Tonight's live stream has nothing to do with NIO. Although NIO did go, if you bought it last September at $1.65, today you would have made about 24 times your money, right? Which sounds pretty good, right? If you can take 10 grand and make 250 grand, right? But what if there was a way instead to take that same 10,000 and turn it into $1 million? With, I'm going to call it the fast lane strategy, okay? And I can almost guarantee there is people in our audience. I don't know if they're on the live stream today, but there are definitely people who are in our subscriber list who have done that, who have made, I don't know if they start with 10, maybe they did 50 grand and they turn into 5 million, whatever the number is. But there are definitely people who could have done this, and you could have done this, and you could still do it. And that's what we're going to talk about. We're going to talk about the future, how to start with what you have now, and make some serious cash with these next super stocks that you see on our live streams. So let's get into this. So here's two different scenarios, okay? And this is, again, 10 grand into 10 million. How to turn $10,000 into $10 million in 3 trades, okay? Most people, they let's say they start with 10 grand, they buy a stock, let's say it's a 10 bagger. So they get 100 grand and they think, okay, it's going to be maybe 20x, 100x. And, so it might turn to 200 grand. And if they're really lucky, which it does happen, sometimes you could have 100 bagger. I mean, there are definitely stocks that go up 100x, but it could take a couple of years. Usually these things do not happen overnight. Okay, maybe really for something big to happen like that, 100x return, usually takes 5 years if it's a legitimate company. But we have a better approach. And again, this is, I'm going to put up the banner here, which says this is not a recommendation, high risk. Okay. Here's the strategy that I want you to consider. This is the fast lane approach. You start with 10 grand, whatever the number is. Okay, whatever you're putting in, it should be money you could afford to lose. You're not going to worry about it because, you know, scared money don't make money, as they say. Okay, so you don't want to have scared money. Let's say you start with 10 grand. You get your first 10 bagger, that becomes 100 grand. You parlay that into the next 10 bagger. Now you have $1 million. Okay, and usually these 10 baggers take about 10 months to kind of mature. The gestation stage is right about that 10-month period. Now, here's the good part. You take that $1 million and you turn it into the next 10 bagger. So now you did 3 trades, 30 months, $10 million. I don't think it gets better than that. And the great thing, which I didn't know that, I know we have a lot of Canadians in the audience. I just found out about these savings accounts that you guys have, which is you pay no capital gains tax. So this is, you know, this is what this is made for. So, and can it be done? Absolutely. Let me just show you. Okay, so here is Cytodyne. Cytodyne debuted on our live stream last August. Stock was 50 cents. So that was right before NEO. So the stock, you know, if you would have bought Cytodyne 50 cents, and actually at the time that NEO was $1.65, you could have bought Cytodyne at the same price, more or less. Now, here's what happened. Cytodyne ran up to $10 this July. So within less than a year, you had a 20x return. Okay, so if you start with 10 grand, at the peak, you would have had 200 grand. Now, here's what's interesting. CloudMD. In July, the stock was, you know, let's say 50, you know, what is it, 40 cents US, 50 cents Canadian. It's up 5x. Now, if you would have taken that money from Cytodyne, if you would have sold Cytodyne at $10 at the peak, okay, waited a few weeks, parlayed that into CloudMD, if you would have rolled it over, you'd be at $1 million. Okay. Now, of course, I'm using a perfect scenario, and you know, this is in the real world, things are messy. It could have been, you know, some various permutation of this, but here is the exact example I'm talking about. August 15th, you would have bought Cytodyne, 2019, start with 10 grand. July of this year, you sold it. That becomes 200 grand. That's 20x. You turn around, you buy 400,000 shares of DOC at 50 cents with that 200 grand. And you Canadians are not paying capital gains if it's in the that great savings account that you have there. And that value, so the value of your account right now would be $1 million. Let me turn to see if we have any. Let's go to the comments, see if we have any. Oh yeah, we go. Let's go to a couple of the comments, and then we'll go back to the presentation. Right. So yeah, absolutely. Don't. Scared money does not make money. This guy bought NEO. Wow, $2. Congratulations. You know, you should sell now. Parlay that into one of our super stocks. Biden. Yasmin, we don't know if he's won. You know, it's. Until everything is in, we don't know. We don't know yet. So here we go. NEO is overhyped. Yeah, maybe. I don't know. I think these e-vehicles are. Listen, it's a lot of hype. There's always hype, but perception is reality, right? Is that $45? Is that a real number on the screen? That's the reality. So everything else does not matter. Okay, so let's talk about discovering. Yeah, how do we find these 10 baggers, 100 baggers? What's our strategy? How can you take, this, and use it to make money? And again, let's roll through a couple of these so you can actually see how this is working. Look, we had Nextech last year, again, 50 cents up, 13x. We had Imagine AR, 2 cents, 35 cents, 17x, 1700%. Here are some recent ones. This is just in the last couple months. Logic up 200%. Pia Energy, one of the small ones. We have Peak, this is one of our hottest stocks right now. The Peak is incredible. Stock is it's basically been a triple. I think it's $1.50 right now. So if you would have gotten in at 40 cents, you'd be 3 times your money. Here's an interesting one. Okay, Fubo. You guys see this on the New York Stock Exchange now. They just did their kind of IPO. They actually started with this back in March. It was called FaceBank. It was on the OTC. Stock was about $8, $9. And, they debuted on that program. It actually didn't really, they kind of dropped the ball. They stopped or whatever. But the stock did double. And now the stock is about $15, $14, I think. And it probably could be a $20 stock. But that's not really what I consider a real success story. Then, of course, we got Cytodyne, we have Cloud. Okay, so what's our criteria? There's really 6 things. And NEO had some of these things, and all of our super stocks have these. So here's what we're looking for. We're looking for companies that are going after big market opportunities, okay, multi-billion-dollar market opportunities. Number 2 is they're at a key inflection point right now. Timing is everything, okay? We want to get in right when the company is about to take off. We don't want to be waiting around 3 years while they're, putzing around trying to figure out how the business works. We want to be in there right when they're starting to sell and the revenues are about to explode. So they're at that key inflection point. 3 is they have multiple catalysts in place. There are multiple drivers, things that can drive that value creation. Either there's a pipeline of contracts, there's things out there which can really get that stock to explode. Number 4, very important, I can't even really underemphasize this, is a CEO that gets it when it comes to creating shareholder value. And how do we know if a guy gets it? I mean, now this is going to sound a little bit self-serving, but listen, it's action. Action is what matters. It's not every CEO talks about maximizing shareholder value, and we want a CEO that's actually going to take it seriously, invest money and time in connecting with investors, like on some of our live streams, and they're going to do it on a consistent basis to build that audience, and so that thousands, hundreds of thousands, potentially millions of investors discover the story. Because when they do, that demand, you have that increased demand, which didn't exist before, meets a great story, stocks go up. It's a formula. Now, here's 2 things which are very important. They're in yellow. We're looking for companies. We want to start off with an edge, okay? This is about, having an edge. So we want companies which are really undervalued compared to their peer group. So when we're getting in, we want stocks which are, they might be trading at a multiple of half of what their peers are trading at. So, if their peer group is trading at 10x revenues, we want stocks that are trading at 2x revenues, maybe 3x. So we want to have that edge because, again, that's one of the potential catalysts. And even we've had companies that are trading at a discount to what valuations are in the private area, in the VC world. And 6 is they have to be part of big themes. We want companies that are riding big trends. Like, for example, you have CloudMD, that's the telemedicine wave. You have PKK, Peak, which is fintech in China. That's a massive wave. If you've been following the news, you probably know about the deal with Ant, the Ant IPO, which kind of got, I guess, put on hold for the time being. But that kind of goes to show you that there's a big change wave, and you want to ride that wave. So we have stocks that are part of those waves, and also we're doing gold stocks right now. We just launched a couple of gold explorations and juniors, and gold, my opinion, is going to be $3,500 in maybe 18 months. I mean, I've been talking about this for quite a while. Not just in the last few months. I've been talking about this for maybe several years. Gold will be $3,500. I can almost guarantee you that. And the junior gold stocks are going to explode, and we're going to bring you some, I think, some major companies. So let me just change over a little banner here. By the way, guys, we are on Telegram. If you got the Telegram app, you got to join this. Look for the Wall Street Reporter channel, okay? And you're going to get our notifications, news, throughout the day. You don't want to miss this. This is going to be great stuff. And we're also now on Discord, thanks to our special guest. So we have a Discord channel where you guys can, talk and, continue the conversation, etc. So let's go back to, this is all about playing for big stakes. We're not looking to, make 50% return, double your money. This is not what this is about. This is about massive gains, venture capital style returns, because we're essentially playing in the public venture capital sector, but we're using some strategies. I'm going to talk about the fast lane strategy, which really kind of takes the Warren Buffett strategy, which is compounding. Okay. It's that snowball effect where you have one winner, you roll that into the next winner, and you parlay it into the third winner. And that's how you get those numbers we talked about. That's how Warren Buffett did it. That's how, actually, we've had one of our favorite guests on our program a while back did that, and you could do it too. Okay, so the minimum, we're looking for realistic returns of 10x to 100x. These are realistic. This is not, we don't want stocks that are going to be 2x. It's got to be something which is going to be 10x to 100x, and there's got to be a clear runway. There's got to be a real clear path to immediate 3x to 5x. Let's say within 6 months, because look, I don't expect a stock to be a 10-bagger in 30 days. That's not going to happen. If it does, it's a miracle. But usually it takes about 10 months. But we want to see traction pretty much right out of the gate. I want to see traction where stock doubles within 30, 45 days. I mean, if we're right, if we're kind of on the ball, the stock will probably double in that 45, 60-day period, and then it could, go 3x from there. And some of our biggest winners have actually dropped a little bit after they debuted, like Nextech, Peak. They kind of dropped about 20% in the first month. They had a pop, and then they kind of fell off. And then, they wanted to be monsters. Okay, so let's talk about this concept and the venture capital concept, the fat tails, and what we call asymmetric setups. So Peter Thiel, you guys probably know Peter Thiel, multi-billionaire VC, the guy, one of the founders of PayPal, amongst other companies, investor in Facebook. His concept is, look, it's the one or two investments that you have, which are the winners. They outperform the entire portfolio. So, you might have 20 different positions in your portfolio. It's going to be that one massive winner, which is going to totally change the game for you. And, I kind of want to add to that, if I may be so humble, is, again, look for that 10x to 100x upside, but where the odds are stacked in your favor. You want the odds stacked in your favor. And we're going to talk about how we do that. So here's the formula. It's pretty simple. We start with a company that has a great upside story. So it's got to have that great concept. It's got to, be that big market opportunity, multiple catalysts, all those things we talked about. And that's multiplied or amplified by, let's use the word promotion, okay? We essentially take that story and, right now the company may have very little audience or zero audience. And now we get that story in front of, hundreds of thousands of investors, millions of investors. What does that do? It creates more demand. So you have hundreds of thousands of people know about a stock versus, 50. All of a sudden you have people, discovering the stock. As the stock gets discovered, price goes up. And of course, we hope that the company is going to have, they're going to have some, positive news flow development. So it's not just promotion. The company has to have, they got to deliver. That's really what you see happening. So, we basically, these companies, when they deliver, we just amplify their results so that investors know about it. And look, the stocks that do well, whether it's like NEO, why is NEO hot now? Because everybody knows about it. That's why the stock is going up. Really, it's nothing to do with their fundamentals. The fundamentals of NEO are, whatever. what, they made 5,000 cars, big deal. Okay. Because look, one of the biggest risks that you guys have, I think one of the key risk in the micro cap market, in the small cap space, is, you have that kind of, high potential, hyper potential stock that, it's a potential 10 bagger, but the problem is nobody knows it exists. The company, nobody knows it exists. The stock stays stagnant. It's undervalued. And when you have a stock that nobody knows about, there's no volume, no liquidity, that company can't access capital. They can't get M&A opportunities. They can't attract top talent with stock options. I mean, if you're a tech company, how do you compete with Facebook and Google and Amazon, whatever, who give their employees options on stocks that are going up, and you have some crappy stock that is stuck going nowhere? You can't. So you're not going to get the people who can really make a difference in your company. And look, we've seen this happen. As soon as the stock starts going up, the companies can raise capital. They can do M&A. They can attract talent. We've seen that happen with some of our biggest winners. All these, the 10 baggers, the 10x plus. The CEOs. One of the things we're looking for is CEOs who know how to take advantage of those opportunities when they present themselves. So when the stock starts running, these guys are, they take advantage of it, and that's what that creates the reality for the business. They take that capital, they invest in the business, and next thing you have, a potentially $1 billion business. Let's go to let's see here. Let me change this over here. Okay. Let's see let's go to the comments for a second. Okay, so yeah, so I'm gonna go through the comments in a little bit. All right, so let's talk about the next super stock in the asymmetric or asymmetric. I don't know how you pronounce it. Is it asymmetric? The asymmetric setup. Okay, so you have a upside of 10x to 100x. So that's a $1 stock that could be a $10 or $100 stock. The risk is limited. The risk is maybe 50%. Usually, I mean, we've seen the stocks that do well, they never really drop more than 20, 30% out of the gate, because if they do, there's probably a problem, and we haven't had that happen. I mean, if they drop out of the program, that's a different story, but the companies that are working with us, we haven't seen that happen yet, I should say. So you're really risking 50 cents to make $10. So 20 to 1, pretty good odds, I think. And here's your edge. The edge is you have the kind of that built-in, the IR program, which we do, which creates the awareness for the stock, which we know is going to get more eyeballs on a stock, and that's going to, if the story is good, those investors are going to connect. It'll be a winner. By the way, I'm going to be wrapping up this presentation in a few minutes, and we're going to open up for the live chat and our special guest, who should be logging in any second now. Okay, so here's some quick rules. Just keep this in mind. Number one, you got to get in early. You got to be in the water, ready to ride the big waves. Okay, you can't be, sitting on the beach on the sand, looking out at the ocean and saying, "Hey, when the big wave starts coming in, I'm going to run out with my surfboard." It doesn't work that way. You got to be out there in the water, because you got to be ready to ride that wave. You don't want to be chasing stocks that are going parabolic, when they're up, massively, and then, your risk becomes much bigger. Number two, do your own research and do your due diligence. Pretty obvious. Don't listen to, just this, what we're talking about, because, obviously, this is not independent opinion. I mean, the companies we work with, they're paying us, they're clients. And also, we don't recommend stocks. We don't say buy, sell, hold. That's your decision. So it's up to you to decide when to buy and when to sell. Very important. And up to you how much capital you allocate to each position. That's critical. So those two things really is the difference between, the guy who's going to make 10 million and the guy who's going to make, 50 grand or whatever. Or maybe somebody's going to lose money. If, I'm sure there's going to be people who, they're going to buy these stocks at the high and sell at the low. There's always those people out there. If you're watching, don't do this. Okay. Listen, know when to cut losses, and most importantly, when do you cash in? You got to take profits. Look, when a stock goes parabolic, it goes up, 10x, 20x. You want to take money off the table, roll it into the next winner. This is all about, again, our strategy, though this fast lane strategy is about parlaying your capital, compounding, taking 10 grand to make 100 grand, 100 grand becomes a million becomes 10 million. 3 trades. I think it could be done in 30 months. Who wants to take the 10x the $10 million challenge here? We'll talk about that in a second. Okay, so to wrap up, fast lane strategy, let's say I'll give you also another example, another scenario. Let's say you would have bought Cytodyn at 50 cents. You sold it at $10. So you made the 20x your money. That 10 grand became 200 grand. Let's say you bought the cloud, that became $1 million. Scenario number 2 is you sell cloud at $5. Let's say cloud goes to $5 Canadian, right? I think it's going to go a lot higher, but whatever. Let's say it goes to $5. I mean, you're in at 50 cents. Why not take some money off the table at $5, right? Now you got $2 million that you have. Okay, if you've been following the system so far, you got the first, you got the second, and so now we're getting ready to do our third 10 bagger. So you take that the 2 million, you take that $2 million. And this is the hard part. You're going to roll that into the next super stock. I don't know if you're going to put all of it because that's a lot of money. But let's say that becomes a 10 bagger. You have that three-peat. The three-peat, I don't know if I could use that because I think that the three-peat has been trademarked by the, the NBA guy, the coach. But basically now you have $20 million. So that's a potential scenario. Or, hey, you could buy and hold. Let's say you would have bought Cytodyn last year at 50 cents. You took that $10,000. At the peak, it would have been worth $200,000. Okay, so in July, it was your 10 grand became 200 grand. But if you held on to it, it would be worth $50,000 today. So you'd have made 5x your money because that stock kind of crashed. I don't know. It might, you never know with these things. It might come back. I don't know. Make it to $1,000. I have no idea. Okay. But basically, buy and hold, does not always work out. I mean, or it could have been, let's say Cytodyn could still be, $10, so you'd have had 200 grand. Would you rather have $200,000 or $1 million, or in this case, a lot more? So we talked about this fast lane strategy, 3 10 baggers. So 10K becomes $10 million in basically 3 trades. You start with 10 grand. You got 10 bagger number 1, 100 grand, 1 million, 10 million, 3 trades. I think it could be done in 30 months. Okay, I think I'm done. Let's go into the live chat.